What's good? It's David DC. I'm back with another video. Right now I'm on my phone. I'm going to show you guys how to make money from your phone with the Forex market. So if you don't already have MetaTrader 4 downloaded, go ahead and download MetaTrader 4 and TradingView and Stinu. Okay, but today we're going to be on MetaTrader 4. Okay. So basically this strategy is a simple scalping strategy using basically 3 indicators. You don't need any more than that. Just have the simple knowledge of market structure, and I'm going to go over that with you in a second. So indicators we're going to be using is a moving average exponential 200. Make sure you change it to exponential. You can make this one whatever you want. I'll make mine green. Right. The other one is a 50. Make this one white. Moving average exponential. And the other indicator is the RSI. Copy my settings. Period 4. Levels 30 and 70. And you can make the style white. I got mine green. It don't matter, really. So this is the setup. We're only looking at this on the 15-minute time frame. Okay. Go to a different one. Works on anything too. So if you don't know what market structure is, basically this strategy goes along with market structure. So with the low and the higher high and the higher low, the higher high, higher low, and the uptrend, we basically enter on that higher low. You feel me? And the white 50 EMA will act as that entry point. So when I show you on the screen, you'll see how going along with market structure, we're in the uptrend, and where we would enter, we would see price coming back and retesting on that white 50 EMA, right? And staying for a downtrend. So yeah, it's important to know market structure and how the market moves, because you'll see it literally every day, all day, every day. And you only want, in the 200 EMA just tells you the trend. So whenever you see the cross, the green line is above the white line, and you see how this, you see how price came here. It was a downtrend. We broke into a downtrend, did its formation, double top right here. We broke new lows, broke this low, pulled back. And if you knew what you was really doing, you could have entered here, but we didn't. I'll wait till it touches the white line here. And I would have entered, go for a 2-to-5 ratio. That's a 2-to-5. I have to show you. But I would have entered here because everything lines up. The RSI must be oversold, overbought if you're selling it, or it must be oversold if you're buying it. And you want to always trade in the direction of the trend, So, and you can also go on the lower time frame, like the 5-minute and the 15-minute, because if you was to go on the 5-minute, you would have been able to catch this move right here. The white EMA would have been touching this, and you would have been able to enter. So you don't have to strictly stay on the 15-minute time frame. You can go down to the 5-minute or the 1-minute. You can also go up and use this strategy too, but I stay on the 15-minute because you can see it pretty clear. And the longer you get into this and trade this strategy, trade this way, you'll get used to looking at market structure like this right here. We're in the uptrend. The white EMA is above the 200 EMA. We got this right here. This would have been the entry point right here. We saw price come down and pull back into the 50 EMA, the RSI is oversold, meaning since we're in the uptrend, we're looking to buy it. So we would have bought here. I normally do a 10 to 15 pip stop loss, depending on how much you are risking. But you see, I entered here. I'm already in the trade on this one. Out of profit. But and this works. This works. You can do this all day, every day. You know what I'm saying? You can spot multiple setups. You know, this is just one time frame. I mean, this is just one pair that we're looking at. But you can see how all these indicators. Notifications. You can see how this works though with the market structure. See here, we're in the uptrend. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. I'm gonna mark this. That way I can show you on a different time frame. So on the 5-minute time frame, you can see it even better. So like sometimes you might see the market pulling back on the 15-minute time frame. Always go on the 5-minute or the 1 minute to see what it's doing and see if it's touching the 1 EMA, because that can be a better entry. You can get a better entry. You know what I'm saying? So don't stick to just the 15-minute time frame, but always look at. I stay on the 15-minute time frame using this, but you can always go to the 1 hour and the 4 hour to get the direction of the day and the open. But you see this double bottom right here, boom, the impulse, break and retest right there. You would have entered either here, down here if you knew what you was doing, or you entered here. You get three chances to enter right here and catch this big move, and then you would have had another chance right here. If you was on the 1 minute, since it's the 5-minute time frame, if you was on the 1 minute, the white EMA would be touching this, and you could have entered here, and then you would have been able to go up and catch that. And here's the bigger pullback right here, the major pullback. Now that would have been where you would enter on the 15-minute time frame. See what I'm saying? So, use different time frames to get better entries, but stick to the 15-minute time frame, and understand how market structure works. That way, you're not just lost. You feel what I'm saying? Because market structure is king. You don't even need indicators, honestly, if you know what you're doing for real. But to the newest person, these 2 indicators will actually help you. These 3 indicators will help you with trading. You see? Look, boom. It stalled for a minute. Don't trade in consolidation. Always make sure. See, can't really not say don't trade in consolidation, because me personally, I would have entered right here. My stop loss just would have had to been not stopped out in order to win this. You know what I'm saying? But you would have caught this move. Boom. It pulled back. Did its retrace. Pull back. It's not really a big downtrend because it reversed, but you know what I mean. You can normally overall catch big moves. You just got to be watching it. And I would go on TradingView and set up alerts, because you can set up alerts on TradingView for the EMAs to cross or for price to come back and touch, you know, the EMA. Just learn how to do that. It's videos on YouTube. That way you don't miss out on the moves, because sometimes no one's trying to look at the chart all day and shit. You feel me? So set alerts and do what you need to do. Take notes. Ask me questions if you need any questions. You know what I'm saying? Yeah, watch the video. This is an easy way to make money from your phone. Easy way. Last week was a good week. Still a lot of losses, but that's just because I be testing a lot. I test a lot of things. But you can easily come up. I hope you guys enjoyed. You know, like, share this with somebody if you want. So I forgot to go over the risk to reward ratio. So I want to go over that real quick before this video actually ends. So let's see. So when you're doing this strategy, I want you to only chase 20 pips. We doing trend trades, okay? So instead of just setting one indicator, one trade, you're doing two, okay? The first trade, you're gonna go for 20 pips with a 10 pip stop loss, okay? Or the 15, it don't matter. I would do 15 because you get stopped out a lot. Or if you want to know how to really place your stop loss, look at the last low. Go back in history and look at the last low and place it below that last low. That way, you're less likely to get stopped out, because the market makers want to stop you out. Okay, understand that. So when I said 2 to 5, is what I really mean. Since I'm not on my computer, I can't really work this as well as I want to. I'm looking at this number right here. This number, that 2.5. I'm looking at that. That's what I'm looking at. Okay, so that's what I would normally go for the first trade. Okay, that's the first trade. That's the trade that you use to grow your account. Okay, when I say twin trade, I mean once you're in when you set this trade, you set another trade, but without a take profit on it. It has the same stop loss, but no take profit on it. That way, when you catch a move and it's going all the way up, you're only catching 20 pips. You have the twin trade to do what it need to do. You know what I'm saying? So you can catch all the other pips that you're not catching with the original trade. Because the original trade, it's not, you don't always get 20 pips. You know what I'm saying? Sometimes it gets 20 pips. Sometimes it hits 19 pips and go right down. You feel me? So, like, you want to always have a second trade going, but watch it. Trail and stop it every time it goes up. Every time price goes up, you want to move your stop loss. This is with the trend trade, okay? So you enter right here. This right here is easily 20 pips, so that would have closed out. If you had your twin trade, it wouldn't have closed out. It would have pulled back here, continued up. Pulled back here, continued up. So every time it pulls back, you move your stop loss up. You feel me? To ride it up, to ride up the trend. Okay, that way when it does reverse and you're all the way up here, you're like this, your stop loss is right here, and you don't get stopped, you don't lose any of your profits, because, you know what I'm saying, your stop loss is right here when price comes down and close you out. You feel what I'm saying? And it's the trailing stop it, trailing and stopping, trail stop. I suck at words. Trail it and stop it. Okay. It's just a good way to protect your money when you're actually in a profitable trade and it's going up like this. Like, what I mean by stop loss, if I was to enter right here, right, I will put the stop loss below the last low. But sometimes the low is low as hell, and you might not have enough money in your account to really risk that. You feel what I'm saying? That's why I say go for probably 10 to 15 pips, or you can use the 200 EMA as your stop loss. You can put the stop loss down where the 200 EMA is, however many pips that is, and it protects you. You just want to be protected because the market literally will intentionally spike you out and get you out of this trade. Just because, you feel what I'm saying? Because they don't want people to make money. You have to you have to know how to trade with the market. And it happens. Everyone loses, everyone wins or loses with this. It's not like you win every trade with this, but you win a lot more than you lose if you do it correctly. Like right here. We're on US 30. You with the US 30 right now, it's transitioning into a downtrend. Maybe. Just maybe. You have to wait and see. With Forex, you must be patient to understand how the market is moving. And once you understand how the market is moving, you can capitalize off the movement. But right now, we're waiting to see what it does, because it can either come here. This can be a pullback to go up, or it could just be saying, "Fuck this uptrend, we finna go down," and then that way we capitalize off the strategy.